Is it time to invest in Asia? Well, according to a Credit Suisse poll, sentiment on the region is bullish. So which sectors and regions could be the biggest gainers? Well, Chinese stocks and energy companies are tipped to lead the advances this year. Why China? Well, respondents say concerns about inflation seem to be overdone. And despite policy tightening, growth may come in around 9%. As for energy companies, well, their earnings are forecast to get a boost from higher oil prices. On the flip side, the prospects are not so encouraging for India as investors cite continued inflation concerns there. Meanwhile, almost a fifth of respondents predict Japan will be the worst performing market in the Asia-Pacific region in 2011. Well, for more on this poll, I'm joined by Jahanzeb Naseer. He is Credit Suisse's product manager for Asian research. Good to see you, Jahanzeb. But first of all, I'm looking at the results of this survey. 46% of those you surveyed predicted that the MSCI Asia Index ex-Japan would rise by between 10 and 20%. Then you had another big chunk of people, 38%, saying it would either rise by 10 or fall by 10%. These are volatile times. It's very difficult to call. Did you feel that the results reflected that, or do you see a consensus here?
I think what kind of stands out from the results is that there's a large proportion of investors who are bullish, but they're not massively bullish. So bulk of the investors are between the 10 to 20% range. If you conducted this poll probably a year ago, which we did, a lot of the investors were in the 20+% range. And you're getting a lot of investors which are more in the undecided range, like kind of the -10 to +10% really means that they don't really have a strong view at this point in time. And which is to be expected, that there's a lot of still confusing data out there from the macro front. Companies' earnings are also kind of susceptible to higher energy costs. Inflation is a concern. So there is a lot of volatility out there still. But that also gives us some hope that with all these investors undecided at the moment, if clarity comes in on any one of these issues, we will see a lot of them perhaps jump into the bullish pool, which already has about 48% of the investors there.
Now, how did the unrest in the Middle East and the Japanese quake play into these results, do you think?
We also asked another question to our investors, which was that what do you think are the biggest risks to the markets in 2011 and 2012? And a large proportion of them think that Middle East, what is happening on the Middle East, the turmoil and the reflection on the oil prices is going to be the biggest risks for the market in 2011. But they also thought that in 2012, that's not going to be a risk. So they think that it is a big risk, but it's probably more a 3 to 6 month problem. And if we get over that hump, then they think that the biggest risk going forward is probably global inflation.
But global inflation, you say they think will wane, concerns will wane in the second half of the year. What's the basis for that thinking?
I think that is more of our view. That's more of our house view rather than the poll from the investors. And the basis for that is that a lot of the inflation numbers that you calculate just arithmetically are year-on-year numbers. And we've seen a lot of rise in the food prices. We've seen a significant rise in oil prices. So just from a year-on-year point of view, in the second half, this numbers should start coming down. First of all, a lot of the food problems that we are seeing are more kind of one-off issues. They were more seasonal droughts and all that rather than a pure demand-driven increase in food prices. And if that is the case, then with the new crops coming in and with the new season, we should see some of that easing. And also, if the Middle East actually does turn around to be a 3 to 6 month issue rather than a long-term problem, then oil prices should come down. And we also think that there's quite a bit of excess capacity in Saudi Arabia, which should ease fears of further rise in oil prices.
Is there any risk that you think the investors you surveyed are underplaying? For example, we have the European debt crisis going on. We have unemployment in the U.S. not really budging. Surely those factors are going to affect Asia.
Definitely. And I think they are concerns, but they put them more as concerns for 2012. I think unemployment, a lot of people didn't think that that was a big concern. Primarily because they think that the new numbers that are coming up are better, and also that is a lagging indicator. So once the economy turns around, it takes a while for the employment numbers to start picking up, which we hope will happen in the next 3 to 6 months. European debt crisis surprisingly was put in as a concern for 2012 rather than 2011, which we also saw in 2010 that it was put as a concern for 2011. So it seems like that the markets are deferring that crisis to every year to the next year. So they don't.
Perhaps
they're hoping at least that that doesn't translate into a crisis this year.
Perhaps they see a default down the road. All right, Jahanzeb Naseer, we thank you very much for joining us from Credit Suisse.
Thank you.